You're on Twitter, just use the hashtag there at the bottom of your screen. You can also email us, yourmoney@skynews.com.au. Let's get straight into it. Julie, your thoughts on this session today?
James, we must have been good this year because Santa did come early for the market, up by 0.7%. On light volumes, $1.6 billion being traded. That, of course, follows a record US performance. And we saw all sectors on the market today trading higher, with the one exception of the property space. I think the standout areas today was the industrial sector, but also mining services popping out. If we have a look at skilled engineering, that was up by 4.9%. UGL also doing well today. And the last time I checked, for the month to date, the market was down by 4.2%, but I checked again today and we're actually up by 0.1%, so in the black for the month as well.
Still the end of the year. What are your thoughts on the likely outcome for the markets?
Well, the official Santa rally period is from after Christmas to New Year's, and that's usually quite a positive one for the market. In fact, since 1993, over the last 20 years, we've seen 16 years where this has been a positive time for the share market in Australia. The average gain in that time has been 0.9%, so just under 1%, but on very light volumes. But altogether, the month of December is very positive as well. Over the last 20 years, 16 years have been positive. There have been different ones to the Santa rally periods, but the average performance in the month of December is 2.1%. This year, at the moment, we're tracking for 0.1%. Let's hope we add on to those gains during that period between Christmas.
On the outlook for the retail sector?
Well, if we have a look at retailers, this is the most important time of year. In fact, if we have a look at a stock like David Jones, it makes up about 1/3 of half-year numbers and half-year sales numbers. So it is a very important time. There will be some interesting innovations, and I think David Jones is one to watch. They're being very careful with when they do their sales and how long they do their sales this year. But of course, the sales are going to start early. So 6 p.m. tonight, their stock take sale starts. So not only will we be watching the sales revenue numbers, but we'll also be watching the margins as well. The last few years have been very difficult for retailers, with huge amounts of discounting coming through. It'll be interesting to see whether we see the extent of discounting that we have seen in previous years, given that we have seen the stock market higher this year, the housing market higher this year, even though income growth hasn't been absolutely huge out there. So I think I just went to the shops at lunch. There were a lot of last-minute shoppers around, and it does bode well for the retailers, especially some of those specialty retailers which have done phenomenally well in 2013. Just looking at Kathmandu, and the stock's up 108%, and of course JB Hi-Fi has been a standout all year, up by 107%. So we'll be watching those Christmas sales. It does account for about 1/3 of the half-year sales numbers and revenue numbers, so it is a very important time for those retailers.
Yeah, we're going to be speaking to Margie Osmond, the CEO of the Australian National Retailers Association, at the top of the hour, get a bit of colour around expectations, in particular for the Boxing Day sales. Julie, you made mention the likes of Kathmandu, some of the special retailers really outperforming. How important is it to not just take the retailers as one size fits all, but to actually drill down into the individual stocks and companies?
Well, I think the sector as a whole has done well, but it is very much those specialty retailers which have outperformed. And I guess those specialty retailers have managed to not only maintain margins, but also managed to increase sales at a lot more faster rate than the department stores like David Jones and Myer have. And I guess if we have a look at stores like David Jones and Myer, we know that the retail side of the equation, the retail clothing side of the equation, has been a very difficult proposition. We've seen international retailers like Zara, Topshop coming on board. We've got Uniqlo also opening up here in Australia. So intense international competition, not to mention the structural challenges coming from the internet as well. But some retailers have done it very tough. If we have a look at a retailer like Billabong, that has been a case in point. A lot of that are not only due to the troubles it has had in its business, but also the debt burden that it has. So we have seen some massive restructuring. And of course, stocks like Pacific Brands still are chugging along despite the troubles that we saw during the global financial crisis. So this has been a hugely difficult area to have been in over the last 3 or 4 years. But the fact that we started to see positive like-for-like sales in some of these retailers in 2013 bodes well for 2014, that the cycle has turned and that cyclical stocks will outperform in 2014.